So earlier this year, there were situations where strata corporations of residential buildings were receiving renewal notifications from their insurance company. And it required massive increases in the premiums as well as the deductible portions of their insurance. Really a very serious situation. Hi, I'm Gary Bourne at Royal LePage Sussex in North Vancouver. And I'm here today with Doreen Gregson. She's an insurance expert and owns the Cooperators Agency over on Lonsdale near 13th. And she's been a financial planner with over 40 years experience, specializing in financial planning as well as insurance. So Dee is here to help add some light into this very critical situation. So Dee, thanks so much for joining me today.
Thanks for having me on your blog, Gary. Glad to. You're
Cool.
right when you say it's a serious situation, and it's a quickly moving one as well. So we have lots more questions than we do answers, but happy to try and answer a few of them for you.
Okay. Well, first one is, what has caused this to happen? It seems like it's happened very abruptly, starting at the beginning of this year.
Yeah, we started getting glimpses of this, hearing about this, and getting the odd phone call about these increasing strata deductibles for condo owners around sort of late fall. It was primarily an emerging problem in BC and Ontario, and primarily those kind of hotter markets of Vancouver and Toronto. So we started to see this bubble up, and really there isn't one cause. It's kind of a perfect storm, and there's four major factors that have caused this to happen. The first is that claims have been terrible for condos. And we all know what happens when claims are high. It means that premiums have to go up in order to cover it, or risks have to be excluded from the coverage, so or a little bit of both. So that is the challenge, is that with more claims caused by climate change and other wildfires, we've all heard about the severity and duration of our wildfire season, and also water claims, which for the first time have overtaken fire claims in Canada. So we've all heard about the spring thaws flooding communities every year. It's no longer a 1 in 100 or a 1 in 1,000 year event. So claims are up, and also the cost to make somebody whole has gone up. Anybody who's tried to hire a contractor or plumber, electrician knows that rebuilding costs are high, especially in the two jurisdictions we're talking about. So that's a challenge. More claims, more costly to restore people to their pre-claim position. And also there are fewer insurance companies taking on strata risks. Here at the Cooperators, we got out of that business many, many years ago, and there are fewer of these companies in the market, and they're consolidating. So what we're finding are fewer players willing to take on the risk, and therefore, premiums are going up.
Mm.
Fourth big issue, and it really takes into account all insurance, not just condo insurance, is the fact that we're in a rigid market right now. And insurance has cycles, just like the economy has cycles. So if you think about an economic recession, you think about hard times, you think about a restriction in credit and prices going up, and all of those kinds of things. With a rigid underwriting market, it's like that, where underwriters have very little appetite for risk. They don't want to take on anything but the best risks, and premiums are really going up. So for the first time in many years, clients are finding that even though they've been claims free and they have a great record and great relationship with their insurer, their renewal rates are really going up. And in some cases, underwriters aren't prepared to renew their risks for reason. So when you overlay that kind of environmental landscape and think about all our condo stock, much of which was built in the 70s and 80s, and think about all of those owners and managers of those buildings and strata councils that may or may have not done the maintenance required to keep these buildings in really good repair. So all of that's contributed to the situation we find ourselves in now.
Okay, very good. Thanks, Dee. And what are these increases looking like, and the changes in the deductible portions?
Well, it's quite, quite stunning, really. We have seen deductibles which used to be, 15,000, 25,000, maybe 50,000, uh, skyrocket. Now, $100,000 strata deductible is not at all uncommon, and we see 250,000, and in some cases 500,000. Gary, never thought we would see that. So this has resulted in stratas getting these renewal notices with increases in the order of uh, 30 to 50% is the lowest I've seen, and we've seen some as high as 300%. It's really quite frightening, and clients are calling us going, what do we do? How do we deal with this?
Oh, wow, so difficult. What types of buildings and, say, geographic locations are most vulnerable to this?
I honestly don't know how widespread it is. I think the concentration is more by insurer. However, older condos are at much greater risk because, of course, they probably have more outstanding maintenance issues. Um, so that I know is a concern. Any building built before 2018, I know gives our underwriters pause in this rigid market. So unless you're a brand new condo, you really want to look at that maintenance record, read the reports, and know what you're buying.
Okay. And what can an owner or strata corporation do to ensure that they have adequate coverage but aren't overpaying for unnecessary coverage?
Well, that's an easy answer. Get some advice from someone who knows how to read that gobbledygook policy wording. It's really confusing. So you want to find someone that has experience and competence, willing to sit down and answer your questions and really walk through that summary so you can understand what those coverages mean and the difference between comprehensive coverage and buying maybe a cheaper policy that only covers certain perils.
Right, okay. And buildings in BC must have insurance covering 100% replacement costs as per the Strata Property Act. So what could a building do if they can't get insurance?
Well, this is the conundrum that some of them find themselves in. And our act is silent on underinsurance. It just says that stratas must have insurance. So it is a real gap currently, and our regulators are clearly aware of it, but there have been no solutions offered up as yet. But firstly, you can have a look, of course, at your own coverage, both the limits and the deductibles, just to make sure that you don't have any gaps personally. In terms of saving money, we always sit down with clients and look at every discount in the book. Can we get you a non-smoker discount, or is your alarm monitored, and have you been a client for many years? So there's lots of ways to drive bundling discounts as well. So that's important, not just to make sure that you've got the best premium you can in a really difficult market, but that there are no gaps in coverage and you have sufficient strata deductible coverage in case something does happen and your units fall.
Right, okay. And with this, does the depreciation report for a strata corporation become more important?
Oh, you bet. And as a realtor, you would for sure know this to be true. I know you advise your clients strongly about this, and it is very important that you look at the record of that building. You wouldn't buy a used car without checking in the glove box for the receipts to see what had gone wrong. And when you think about the largest purchase that many of us make, it's our home. We want to make sure that we know what's behind those walls, and is it going to be a challenge in terms of special assessments going forward, or other fees and levies, because we've inherited maintenance issues. So it does behoove all unit holders to really look at that depreciation report and do a deep dive.
Right, okay. And what are the insurance brokers in the insurance industry doing to address this situation?
Well, we are always representing clients, so it's the insurers, the manufacturers that create these policies and policy wording, and many of them have gotten out of the strata business for sure. And many of our retail clients that are condo owners concerned about making sure they don't have gaps in coverage. Depending on the building they live, it's possible that they can't buy what they need. We can get special kind of bolt-on coverage from other partners, and we do quote that for clients, but you know, it's expensive. And it's just a real challenge. I know in some cases, unit holders have gone back to the strata council and they've been able to negotiate with the insurer to either raise the limits higher yet, or to create a special fund that all the unit holders pay into to help bridge that gap. But it's a tough situation and there's no easy answer.
Okay. And what should individual strata owners or buyers of strata be looking for when they're looking at their insurance policy?
Well, for sure you want to look at what your strata deductible limit is, and you also want to make sure you have a copy of your strata's confirmation of insurance so that you can see what their deductibles look like. Because if your dishwasher overflows and does damage to the unit underneath, so you're to blame, and the strata has a $50,000 water deductible limit, then you've got to know that they're not going to respond, their insurers are not going to respond until you get to that 50,000. So you need to make sure that your own coverage is going to step up to protect you.
Great. Okay, Dee, well, thanks so much for that. That's some really great advice, and certainly adds a lot of clarity to this very important issue. And everybody out there, thank you so much for watching. Take care.